to day 3 of BTL Blueprint Week here on Property Tribes in association with Nova Financial. We're here at their offices in London, and I'm joined all this week by my guest and co-host Paul Mahoney, who is the MD and founder. And Paul, for this instalment, we're moving on to what is such an important topic, and that is mindset. I think, certainly when I started out 15 years ago, I had very little financial intelligence or knowledge. You're not taught it at school. In fact, one of the reasons that we started Property Tribes in 2009 was because I was so keen to learn and grow myself as a business person. Do you think it's very important that everybody seeks to do that?
Yeah, absolutely. I can relate to that in a similar way. You finish school, you learn nothing about money really. You might learn how to go into business yourself, perhaps in a way, but how to make money, but then not what to do with it. And I think that's probably even more prevalent when it comes to property, is when people invest in shares, for example, they generally think about it fairly unemotionally and commercially minded. It is about making money. Whereas when it comes to investing in property, a lot of people are quite emotional about it, and they focus on what they want and like, as opposed to viewing it as an investment in the true sense of the word. So definitely, I think education, gaining a full understanding of why you're actually going into it, and at the end of the day, most people are investing in property to make money because that's what investing is about. So it should be viewed in that way.
I think so, and also I do want to stress how important that it's an ongoing process, because we talked a little bit about the life cycle of the landlord. Many people think that once you've rented the property out, that's the end of it. Actually, it's not. It's the beginning of the longest phase of the landlord life cycle, which is management and ownership, where you're dealing with tenants, where you're dealing with managing an asset. And again, I think it's very, very important that even if landlords are in a full-time job and they've just got a couple of properties on the back burner, they should still be keeping up to date with landlord issues, legislation, regulation, and use resources like Property Tribes, the forums, and yourselves at Nova, and all the content you produce to keep in the loop and keep kind of growing their thinking.
Yeah, absolutely. Yeah, and again, I think that's another likeness, or a difference between investing in shares. If you had a share portfolio, you'd probably keep up to date with what's happening in the companies you invested in. You'd at least keep your eye on it. Whereas, as you say, I completely agree. A lot of people think they just buy property and it's set and forget, and they're not worried about it, rather than keeping up to date with all the latest of what's happening. And as you say, there's so many resources out there to enable you to do that. But I think it's very, very important because, especially over the past few years, it's a changing market. Yeah. What worked 4 or 5 years ago may not work today. In a lot of cases, it doesn't. And there are certainly, on the other side of it, things that work a lot better than they did 4 or 5 years ago. So if somebody had a strategy 4 or 5 years ago that no longer works, they're not going to be successful unless they've kept up to date and they changed that strategy and adapted it to what works in the current market.
No, I think that's a very good point, and that was very much kind of the thrust of our Smart Landlord campaign that we're running throughout 2019, is that, in some ways, newbies coming to the sector now, they never knew how easy we had it before. They know what the conditions are, they know about the taxation, the regulation, etc. So in a way, for them, it's just normal. But I wanted to pick up a little bit on the fact of don't get emotionally attached to an investment, because I think one thing that everybody should do is put themselves in the shoes of their tenant to understand what their tenant wants. It might not be what you want, but to understand what your tenant wants. A good example that I always use is that when we were purchasing our flats in London, I always used to get Nick to drop me at the tube station at night, and I would walk from the tube station to the potential acquisition just to see if I felt comfortable in doing that, because if I didn't, then a female tenant's not going to want to live there.
Yeah, no, that's a good point. Absolutely. Yeah, I think that's a great point to a certain extent. And what I mean by that is that's a great example. You've worked out there that probably half of your potential target market will want to feel comfortable walking from the tube to their home, and that makes a lot of sense. But perhaps if that particular home was a 1-bed and you live in a 4-bedroom house, that still may not be exactly the type of property that you as a person would live in, but you can probably understand how a young professional may want to live in that type of property. So I think there's definitely very important to understand what your target market wants and likes, and in a way, separate that from what you as an individual want and like, and sort of the stage of life that you're at.
Particularly, when it comes to taste as well, some people spend a fortune on creating this very bespoke apartment with designer features and everything. But for a rental, it's not really going to increase the achievable rent. It might make it slightly more desirable. It might turn some people off. So again, you've got to think about the tenant and creating just a really fresh, clean home for them.
And obviously you want the largest potential target market as possible. So your particular taste may not be the majority of other people's particular taste. So, we always recommend that our clients keep their properties relatively neutral in colour, because, having a red carpet, that will probably turn quite a few people off. And it might be a silly thing, but it's reality. So you want to make sure that your property is as desirable to that target market as possible. And that all ties into that mindset. Understanding, what is going to make this property as desirable as possible, because desirability will drive demand, and demand's going to drive the outcome of my investment.
I think another thing that's always worth reiterating is that numbers will never lie to you. Maths is, very black and white. Whether you're going to get a return or not is you can see it written down on paper. Yeah. So I think, always crunching the numbers is absolutely vital. And you made the good point off camera that some people they don't understand the calculations and they don't look at the correct metrics.
Yeah, absolutely. So understanding the numbers is absolutely important. Also understanding what return means. And there's obviously, with property, there's two different types of return. There's capital growth and there's yield, your rental income. But again, those two things can relate to the asset value, or they can relate to the actual cash that you've applied. So if you've bought cash, then maybe that's the same thing. But if you've bought with a mortgage, which obviously is what most people do, those are two different figures. For example, the types of returns we generally aim for our clients with a 75% mortgage is around 10% net on the funds applied. So that's from a yield perspective. And I'll come to the growth in a second. But let's say we've got a £50,000 deposit. We buy a £200,000 property. We'd want to be achieving around £5,000 of net cash flow. So that's post-expenses pre-tax, which is quite achievable in the current market, given we can borrow at 2 or 3% and achieve yields of around 6 or 7% gross on the asset value. So 10% you're starting out with, and we can be pretty confident about that because we can estimate that based upon comparable properties. We know we're going to get that. Then if we add in growth to that equation, the UK average for growth over the past 20 years is 5.5%. If we scale that back to 5, let's say, that gives us an extra 20% on our cash. Because, your 5% on your 200 grand is £10,000, 10,000 on your 50,000 is 20%. So we put the 20% with the 10%, put them two figures together, we're at 30% per annum on the cash applied. And that's not setting the world on fire by any stretch. But I think everyone will agree that a 30% return on your cash every year is a really good return. So I think far too many people overlook that, the ability of what leverage does to your returns. And that's really why we like property. And the fact that we can achieve relatively average returns on the asset value, but that gives us really fantastic returns on our cash, which means we think if we're comfortable and confident with the 30%, we don't necessarily need to take too much risk or try to maximize yields or maximize growth. Let's invest in the type of properties that are relatively conservative and we can have the most confidence in those returns because we're comfortable with them. Does that make sense?
Well, it does make perfect sense. And I think, again, it's worth touching on the fact that if you do have much higher returns, that it's much higher risk as well, which goes back to what we were saying in the previous video about newbies starting out with very high risk strategies. When property goes well, you can do extremely well out of it. But when it goes wrong, you can lose a lot of money very quickly. So no, I totally get what you say. And again, the numbers never lie. So I get that. I think just, going back to the topic of mindset, I think the other thing that people should really consider is to get inputs from all sorts of different places. Because it's healthy. You don't want to be getting an input from a singularity. If you get inputs from lots of different places, and there's so many good free or low cost inputs out there, you can put those all into your hopper, your mind, and process them, and then you can pull out the bits that are relevant to you and work on those. And just for example, your property TV show, a fantastic resource for landlords, and we can put some videos onto Property Tribes for people to have a look at. But do you agree that the mindset of the investor is to kind of get their inputs from lots of different places?
Yeah, absolutely. And I think people need to decide what they're comfortable with. Yeah. As I say, because there's lots of conflicting information out there, there's lots of conflicting opinions. And if you're going to align yourself with one particular train of thought, then that should obviously be the one that you feel comfortable and confident in. Explore all the different sources, and there's so many of them these days because everyone's giving away information for free now. Everything's kind of shifted a little bit. So you can go out there and you can get all that information, you can gather it, and then decide on what you think is going to work for you.
Indeed. And we'll just remind you about Paul's book, The Property Pension Plan. There will be a link below the video where you can apply to get it just for the price of postage. I still love books, Paul. I read every night. Obviously, people like their podcasts and their audio books. Again, we can take our inputs in so many different ways, can't we?
Look, I love the idea of reading a book, but I never make time to do it. I listen to an audio book about once a week, and I would never read a book a week. So if I'm digesting 50 books a week versus digesting 4 hard copies, I think that's a better thing for me. And in fact, I've just recorded the audiobook of the Property Pension Plan last week, so that should be out in about a month.
Fantastic. Well, that's great stuff. So we've talked a little bit about the mindset of the investor, somebody that's committed to personal growth, development, getting lots of inputs, always seeking to improve their level of knowledge. I just think it's so important now. It will hugely mitigate risk as well, won't it?
Yeah, absolutely. And we spoke about all the changes in the market. If you go back a few years, well, even now, I'd say a lot of people view property as a DIY activity. And I could half understand that. Still don't quite understand it, but I could half understand it a few years back before all of these changes. But when you think about property, it's probably the biggest purchase you'll ever make. Any property you buy is a big decision. And then you add in all the complexities of all the tax changes and legislative changes and finance changes. I think you're absolutely mad to go it alone. So you really do need to make sure you're considering all of these things and you're doing the right thing for you, because there's a bigger gap now between what works and what doesn't.
I think you're right, and I think you've just prompted me to say, actually, that part of the mindset of an investor is you've got to treat it as a business. The days of the hobby landlord, the amateur landlord, the dinner party landlord, whatever you might call that kind of landlord that just had a couple of properties on the side and went about their everyday workaday world. Those days are gone. We are in the era of the professional landlord, absolutely, even if you've got a full-time job.
Yeah, absolutely. It's not something you can just have a property on the side you never think about, because there is so much more to consider now.
There is. Well, I hope you've enjoyed this instalment of our Buy-to-Let Blueprint Week, powered by Nova Financial. And tomorrow we are going to be looking at the fundamentals of due diligence. So join myself and Paul tomorrow for the next part of Buy-to-Let Blueprint. And we'll continue with lots more information, and do check out Paul's book as well.